Okay, fantastic. All right, so like I said, I'm going to be talking about two major things, right? First, I'm going to be talking about market structure. Market structure is key to everything, right? If you are going to be a trader, you have to understand market structure. And then the second thing I'm going to be talking about is supply and demand, right? So I'm going to be putting supply and demand on top of market structure, and voila, that is the strategy. Right? It's something that you can backtest yourself and you would realize that, yes, it actually works. Okay, so I'm going to share my screen now, right? And then I'll just take it. It will be quite fast. I don't want to take more than maybe 30 to 40 minutes for the entire meeting, right? So that hopefully you guys can watch it again and pick some things from there. Okay, so let me share my screen now. Please, once you join in, just mute yourself, okay? All right, so I hope everybody can see my screen. Can everybody see my screen?
Yes, sir. We can.
Okay, fantastic. All right, so first, we're going to be taking a look at market structure. And when it comes to market structure, the market moves basically in three ways, right? For the guys that are intermediate guys, they already know this. The market moves in an uptrend. So in an uptrend, what do you have? You have what? You have higher highs, lower lows, higher highs, lower lows, higher highs, lower low, higher highs, right? And then the market also moves how? In a range or a consolidation. And this is when you have something like this. You're not having any breakouts to any direction, right? So you have something like this, which the market does. And then finally, you have the market doing what? Moving in a downtrend. So in a downtrend, you have something like this, right? In a downtrend, you have something like this, which is what? Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So I'm not going to be labeling all of these things so that we can be as fast as possible, like I said, right? But I'll try as much as possible to, put text and all of that there. So here you have what? You have an uptrend here. Uptrend, right? And then here you have a what? A ranging market or consolidating market, right? And then finally, you have a what? You have a downtrend. This is typically what a beginner person will sort of like have maybe little or no understanding about, okay? But this is how the market moves, right? But then in reality, the market doesn't really move like this, right? I'm not going to be going in depth into that, and that's what you call that the advanced market structure, but I'm not going to be talking about that, right? So now, typically, can everybody still hear me? Just trying to make sure everybody can hear me. Can everybody still hear me? Just say something.
Yes,
oh, okay, my network is breaking. Okay, but you guys can hear me now. Okay. So sorry about that. Niger. All right. So I said you have the uptrend, you have the ranging market, and you have the downtrend. So basically, there are some common things that you guys might have heard. One of the things that you might have heard is what? The trend is your friend, right? You guys might have heard that, right? The trend is your friend. And basically what this means is you want to be in the line of the market direction. You basically want to be following the tide. Wherever the market is going, that is where you want to be, right? So it's a lot easier when you are swimming with the tide, assuming you're in an ocean, than when you are swimming against the tide, okay? So it's basically the same thing when you are trading in the Forex market. You want to be in the direction of the market. Please, at any point in time, if you can't hear me, someone should just let me know, okay? At any point in time, if you can't hear me, please just let me know. Thank you. All right, so Now that we have an understanding of this, it means that, okay, at every point in time, we want to be catching a trend. We don't want to be in this kind of market. We don't want to be in a ranging market. We want to be in a trending market, uptrend and downtrend. That is your friend. Okay, so note this. This is very important. So now I'm going to be going straight to the concept of supply and demand. Okay, like I said, I'm not going to be covering advanced market structure here. It's something that I covered in the mentorship or the lifetime group, right? But I'm just going to be giving a sketch, like briefs of this market structure and then supply and demand and building the strategy on top of it. So now we are going to supply and demand. And basically, what's supply and demand? It's all about market forces. That's what supply and demand is all about. Okay, supply and demand is all about market forces. And as a Forex trader, we use the charts. So for example, you can say I'm on TradingView currently, right? So we use TradingView. TradingView helps us with the patterns, or it gives us an idea where big banks or big institutions are. They leave traces behind that we retail traders can, can make use of and then trade, okay? So now we want to understand the concept of supply and demand. So supply and demand is you might have seen this on your charts. Let's say there is a downtrend, something like this, and then maybe at some point it gets to a supply zone and then taps the supply zone and continues dropping, okay? You guys might have seen something like this or this pattern on your chart, okay? So first, what is a supply? A supply is what? Imagine you're on your chart. I'm going to do chart example for this strategy. You're on your chart and you see, all you see is red candles and green candles, okay? So in a supply zone, it is the last green candle, okay, before a red candle. Your supply is basically your sell zone, okay? It is the last green candle before a drop or before a displacement that causes what? A break of structure, okay? That causes a break of structure. Not to worry, I'm going to show you guys, and I'm going to show you guys a chart example, minimum, okay? One. So your supply zone is the what? Is the last green candle before a huge displacement to the downside. That is your supply, okay? Retail guys will call it support resistance. So a retail person will look at this as what? Resistance, okay? But if you are trading SMC or you are trading ICT, you are going to see something like this, a green candle and then a huge displacement to the downside. This is your supply zone. This last green candle that I marked here is your supply zone. And it shows in every time frame, 5 minutes, 15 minutes, 1 hour, 4 hour, any time frame it shows. But then the higher the time frame you are trading on, the stronger that supply zone is likely going to be, okay? So this is your supply zone. So this is what you're going to be looking out for if you intend to take a sell. And typically what will happen in this kind of scenario is that what? Your trade is going to come to this supply zone, tap in, and then drop. Okay, so this is a supply zone. Now let's move into a demand zone. And what is a demand zone? A demand zone is a level that when price typically comes there, you see price will push up and continue buying. Okay, and how do you know that that is a strong demand zone? A demand zone typically is what? The last red candle before a push or before a displacement to the upside. Okay, so you might hear me say a break of structure or a displacement. So again, your demand zone is the last green candle, sorry, the last red candle before a push to the upside. So this is your demand zone. You are typically going to mark this. And like I said, you will see this on your charts every single time, okay? And we are going to take a look at it. So typically in this kind of zone, you are going to see price do what? One sec, let me change this to black. In this type of zone, you are going to see price do what? Price will come back down to pick orders into this demand zone and then buy, okay? So this is what you are typically going to see. This is the concept of supply and demand, okay? This is the concept of supply and demand, Okay, so in a supply zone, you want to sell. In a demand zone, you want to buy. Okay, so now that I've built this now, we now want to put a strategy on top of what? Market structure and supply and demand. That is all this strategy is all about. It's about market structure, which is important to any strategy you trade, and what? Supply and demand. That is all the strategy is about. So now, let me tell you the 4 things you need to consider first when you want to trade this strategy. Okay, so I'm just quickly going to type it out. Then after doing that, I'm going to go to the charts, and then I'll show you a trade example. Okay, remember, this thing is very important. You can just put it down for the beginner guys. Okay, your supply zone is the last green candle before a displacement. Your demand zone is the last red candle before a displacement to the upside. Okay, all right, now this is the strategy. Very easy. It has no name. It's very easy. They say price is fractal. Understand this. Price is fractal. It means that whatever happens on the higher time frame is going to happen on the lower time frame. And the lower time frame is going to try to achieve the objective of the higher time frame. Okay? So now let's say you're on the 1 hour chart, right? And then you see price doing something like this, buying, right? Price is in an uptrend, okay? You see price doing something like this. This is the 1 hour time frame. On the 15 minutes time frame, you're also going to see price doing the same thing in order to achieve the objective of the 1 hour time frame. So on the 15 minutes time frame, price is also going to be buying. Then at some point in time, price is going to sell, which is a pullback after transactional liquidity has occurred or after a break of structure has occurred. Then you're now going to see price do what again? Change character again and continue buying. So this is what you mean by price is fractal. Okay, let me just quick, I'll stop here now. This is what you mean by price is fractal. Let me make this red. Okay, so the black line here is the 1 hour time frame, right? The red lines here is the 15 minutes time frame. The 15 minutes time frame is going to be doing exactly what the 1 hour time frame is doing, but with a lot more degree of, ups and downs than the 1 hour time frame. And then at some point on the 15 minutes time frame, what's going to happen on the 1 hour time frame? There's going to be a pullback. The 15 minutes is going to change character. There's something called change of character. But for me, I treat change of character as a break of structure, so I don't confuse myself, right? So you're going to see price change from this bullish trend to a bearish trend, which is the pullback. And typically, what you typically have is what? After a break of structure, there is always going to be a pullback. There is always going to be a retracement. And that's what's happening here, right? Then 15 minutes is going to change character again and continue buying to achieve what? The same objective on the 1 hour time frame, which is what? To continue going up. After a break of structure again, there's going to be a pullback. Then a break of structure, then a pullback, okay? That is how price works, right? So understand this concept. When you are trading, you always want to be in the direction of the market, okay? You can always trade this pullback, but it has a lower probability than when you are in the trend of the market, okay? Understand that. All right, so now, this is the strategy. I'm going to write it out first. The 4 things that you need to do, or the 4 things that you need to look out for. I'll write it out first. I will draw it out on a chart. I'll draw it out just with path, and then we'll now take a chart example. Okay, so now let me just put it down. I'll type this out. 4 things that you need to look out for when you're trading this strategy. First, you want to start on the 1 hour time frame. Okay, and here you're basically getting the direction of the market. Is the market in an uptrend, meaning bullish, meaning buying? Or is the market in a downtrend, meaning bearish or meaning selling, right? So the 1 hour time frame is where you're going to get your directional bias from, right? You want to day trade it. Okay, you want to open the trade and close the trade on the same day, right? You are not swinging this, or you are not position trading. So the first thing you want to do is this. You want to find the structure of the market, okay? You want to find the structure on the 1 hour time frame, which is H1, right? 1 hour time frame. And then you want to do what? Identify a break of structure, okay? And then identify a break of structure. Okay, so the first thing is you want to find the structure on the 1 hour time frame. Let me extend this. Let me put an heading here. So I don't have a name for it. I'll just say maybe strategy 1. I have no name for it. Okay. So that's the first thing you want to do. You want to find the structure on the H1 time frame. The second thing you want to do is you want to find a supply or a demand zone in line with the trend on the H1 time frame. Okay, on the 1 hour time frame. You're on the 1 hour time frame now. So you want to find a supply or demand zone in line with the H1 trend. Okay, in line with the H1 trend. We want to find a supply or a demand zone in line with the H1 trend, okay? So the third thing we want to do now is when price comes into that zone, you want to identify another break of structure or a confirmation entry on the 15 minutes time frame now, okay? Remember what I did here, right? What I drew out here. That's what we are trying to achieve here with this strategy, okay? Price is fractal, remember that. So the third thing you want to do is when price comes into the zone, which is your what? The zone that you've marked out. It can be a supply or demand zone, okay? When price comes into that zone, you want to identify another break of structure or a confirmation entry. Okay, this is the third thing we want to do. Now, basically, whatever happens on the H1 time frame, you expect it to happen on lower time frames as well. Okay, that's the idea. Whatever happens on the H1 time frame, on the 1 hour time frame, you expect it to happen on a lower time frame, right? Because the lower time frame is going to do what? Is going to move in the direction of the higher time frame in order to achieve the higher time frame objective. Remember, I've said that earlier and I'm repeating it again. Okay, so that is the third thing you want to do. When price comes into the zone, you want to identify another break of structure or a confirmation entry on the 15 minutes time frame. Now, for confirmation entries, I don't use 15 minutes time frame. I use 5 minutes time frame, right? But the guys in the mentorship know about the confirmation entries using candlesticks. They know about that, right? So here, I'm not going to be talking about, or maybe I should take it out. Let me take out confirmation entry here, okay? So you want to identify another break of structure on the M15 time frame. Again, whatever happens on the higher time frame is going to happen on the lower time frame. And you guys will see exactly what I'm talking about when I draw it out. And the final thing that you want to look out for is that you want to do is you want to sell or buy, right? You want to sell if you marked out a supply zone. You want to buy if you marked out a demand zone, right? And you want your SL to be slightly above the demand zone, slightly above the supply zone, or slightly below the demand zone. So let me go back a bit here and then explain. So if you marked out a supply zone, this is our supply zone here. It means you want to take a short, you want to sell. It means you are going to put your entry will be here, your SL will be slightly above, And then your take profit will be where? Your take profit will be here. Let's say as an example, right? You want to break structure, right? You want to sell to the next break of structure. Now, the same thing will apply if you are buying in a demand scenario. You are going to take your entry here. Your stop loss is just going to be slightly below the demand zone. And then you are going to do what? You are going to take your take profits at the next break of structure, right? For me personally, I have a strict rule of 1 to 3. So I don't necessarily have to wait for the trade to take the entire length. 1 to 3, I'm out, right? Because that's what I've seen works for me. Okay. So now, after explaining this, then point number 4 is going to make sense. Okay. So point number 4 is obviously I use limit orders. So you're either going to use a sell limit or a buy limit, right? I'm not going to say so much so that I don't confuse you guys. Let's focus on the strategy. And so the final thing is what? You want to sell or buy with your stop loss slightly above or below the zone you marked out. Okay, just like I explained here. So you want it slightly above. Now, the reason you are doing this is because of spreads. Okay, it's because of spreads. That's why you are doing this. But of course, if you have a zero spread broker, if you're using a zero spread broker, then you don't necessarily have to leave a spread of maybe 1 to 2 pips just to accommodate any spread issues. Okay. All right. So this is the strategy, right? Now, so now let me now draw it out. Then we now go to the chart and I show you one example. Okay. So first, we are going to be on where? We are going to be on the 1 hour time frame, right? And just like I drew there initially, it's the same thing. Price is, let's take an example of a downtrend. Price is coming down like this, right? So basically, this is the 1 hour time frame. Let me make this black. Okay, so this is the 1 hour time frame. This black line is the 1 hour time frame. You are now going to do what? You are going to mark out the supply. And remember, supply is what? The supply is the last what? Can someone tell me? Just like I said here, supply is the last green candle before a drop. Okay, before a drop, that's your supply. It's the last green candle. So you are simply going to mark that out. Okay, this is the 1 hour chart. 1 hour. So now price is now doing what? Price is going to come back. Most times it's going to come back into this zone. Remember, in this case now, don't let me mention it. There's something called premium and discount. Okay, so you want to be selling in premium, you want to be buying in discounts. But scratch that, forget about that, so that we don't get confused. Let's focus on this. So you're in a downtrend, you've marked out the supply, right? So the next thing that is going to happen is you're going to see price typically come into this zone. The moment it gets into this zone, you are going to do what? You are going to scale down to the 15 minutes time frame. You drop down. Remember, H1, you find the structure. We've seen that, okay, the current structure is what? Bearish. Point number 2, you find the supply or demand zone. In this case, we found the supply zone. We've marked it out on the H1 time frame. Point number 3, when price comes into the supply zone, you want to identify another break of structure on the M15, right? So now let's draw the M15. Typically, what you're going to see is you're going to see something like this happen. Price will tap into this zone, right? And then grab liquidity, break structure. I'll mark it out and I'll change the color. Come back and then drop to do what? To break the 1 hour structure again, this place. Let me mark this out. Right? So this, let me make it red. So this is the 15 minutes time frame. So typically, this is what you are going to see. So on the 1 hour time frame, the market is bearish. We've marked out our supply zone. Price comes in there, you scale down to the 15 minutes time frame, then this is what you are typically going to see. Price is going to come here, take out liquidity, and then drop. So in this zone, in this M15 zone, what are you going to have again? You are going to have another supply that price is going to tap into before dropping. Okay, in the 15-minute zone. So now, with this kind of entry, this is like a, let me move this up a bit. One sec. Oh boy. This is like a confirmation entry. So typically, what you are going to have is this. You are going to have a situation whereby you don't need to have your stop loss cover the entire 1 hour supply like this. You don't really have to have this, right? Like this one now is giving us a risk to reward of 1 to 4. Assumption. This is just an assumption, 1 to 4. But if you are going in with an M15 confirmation like this, right? Basically seeing the same thing happening on the smaller time frame, which is the M15. You are going to see that your risk to reward is going to be higher. So in this case now, you are going to have your SL maybe slightly above this 15-minute high. And then same thing, something like this. So you see the risk to reward here is 6.7, higher than this, right? So having an entry like this with a confirmation on a smaller time frame within a higher time frame zone, you would get a higher risk to reward. So this is the strategy. Okay, let me delete this. This is the strategy. Does anybody have any question at this point before I go to a chart example? Does anybody have any question at this point? Something you want to draw my attention to before I go to the charts? Okay, so no question. So now let's take a chart example. Let's take GPP NZD. This trade, I'm taking this trade because a student, I don't like saying student, but someone in the mentorship spotted out this trade and he took it, right? So I'm going to use this same trade, right? I'm going to take price back a little bit. I hope you guys can see my screen very well. Well, let me make it slightly bigger. Okay, so here now, if you are looking at the 1 hour time frame, you can clearly see that price has been what? Bearish. Just from your eyes, you can see price has been bearish, right? Price has been bearish, okay? So you want to be looking for sells. It doesn't mean you cannot look for buys if they present them itself, if it presents itself, right? But because the direction of the market is sells currently on GPP and ZD, you want to look for sells because that's a higher probability trade, okay? So here now, remember what we said. We said that you want to look for your supply zone. And your supply zone is confirmed by what? A high displacement, or is confirmed with a displacement. So if you look at this chart now, you can easily mark out, remember, last green candle before a drop. You can mark out this zone, right? You can also mark out this zone. Okay? Can you guys see? You can mark out 2 of these zones, okay? This is the last green candle before it pushed down. And this is the last green candle, this one, before it pushed down, okay? So you can actually mark this out. Now, let me take price back to this place, okay? You can mark this down. So now that price is here, the next thing you want to do is what? You want to scale down to the 15 minutes time frame. Remember, first thing, you want to find the direction of the market on the H1 time frame. The second thing you want to do, you want to plot out your supply or demand. In this case, we have our supply is marked out. The third thing you want to do is what? You want price to come to that zone. And immediately price is coming to that zone, you want to scale down to what? To the 15 minutes time frame. So now I've scaled down to the 15 minutes time frame. Let's take price back a bit. Price taps in here. Remember, I have not set my limit order. I haven't taken any trade. Why? I am waiting for another break of structure on the 15 minutes time frame, which I'm on right now, before I take the trade. Remember, the trade could actually, price could actually come to this supply zone, right? So I'm not using a sell limit order here. I am waiting for confirmation. And my confirmation is going to be gotten if I have another break of structure on the 15 minutes time frame. Okay, so I'm still watching. I'm waiting. What is price going to do? Now, this is a break of structure here. It has broken this swing low. The moment I see this break of structure, the likelihood of this trade playing out now becomes higher. Now, what is my point number 4? I want to identify the zone on that 15 minutes time frame, another zone. In this case, another supply zone on the 15 minutes time frame. I want to identify it, which is what I've marked out. It is at this point, I'm going to set my what? Limit order. Slightly above. And what am I trying to achieve? I'm trying to break the 1 hour structure, right? Remember, we're in a bearish trend. Until I break this line here, right? Then I know that, okay, yes, price is likely to continue to the downside, okay? But remember, this is 1 to 5.7. Remember, I said something. For me, I go for 1:3. I don't care if the trade still continues playing out, okay? Most times, I'll take my profit at 1:3. But if the market is fine, you see that the market is going to do what? The market is going to break this low here and continue to the downside. Obviously, it's going to break the low, pull back, then continue to the downside, okay? So now, at this point, I'm setting my limits. My SL is, I said 2 pips. So let's say this is 18.2. So I'll just simply make it, that will be 202, right? And then I go for my 1:3. 202 will be 606, 606. Okay, so this is my 1:3. At this point, I've set my limit order. Then I wait and allow price do its thing. See that? Price came into that zone, tapped in, and started selling. So let's see. Take profit hits, 1 to 3, easy. How long did it take? Let's see. Took only about 2 hours, 45 minutes, and you're done. It got triggered in New York session, or no, London session, before New York session opened. Okay, easy. Now let's continue with price. Let's see what happens. Okay, here it almost broke, but it didn't break. But I'm sure it will break at some point. So imagine holding the trade, all these ups and downs. It can be killing, right? Okay, but basically we have this happen. Okay, now let's go back to the 1 hour time frame, because here there were 2 trades that came up in this place, right? But you've seen this one already, and you've taken your trade 1:3. So let's go back to the 1 hour time frame. Okay, we are good here. Let's go to the 15 minutes time frame. All right, so here on the 15 minutes time frame, this supply zone is still valid, right? This supply zone is still valid because it hasn't been completely mitigated yet. So another trade actually happened here on this same supply zone, right? It still didn't break this 1 hour, this H1 supply zone. It still didn't break it, okay? So I'll just press play with the price and you see, it tapped in there, it tapped in, and it started dropping, right? And let's see, I think at the end of the day, it broke this level. Let me extend this and move to H1. Okay, and then press play price. See? So this is what, this happens every single time, every single day. See that? So if you had the, emotional strength to hold this trade, you would have held and you get your 1:6.87, just like that. The only difference is you would have had to hold the trade from, let's see how long. They have had to hold the trade for 4 days, 15 hours. Okay, that's the only difference. But this is something that happens every time. Once you are in line with the trend, you are going to be fine. The trend is your friend. It's that simple. So this is the strategy. This is it. There is nothing more to it. Let me go back to where I was writing. I think it was on US 30. Okay, so that chart example that I showed you is exactly what happened here. Exactly what happened here. Very simple. So now all you have to do is to backtest this, and you see that it works for yourself. So now I'm going to stop sharing. I'm going to stop recording, and then you can ask questions if you have any questions. One sec.